Well, it's that time once again. Welcome back to Krown's Crypto Cave. It's a beautiful Sunday over here in Helsinki, Finland. As always, want to be wishing you well as I take a peek outside and see the nice sun in the air. And of course, because it is a Sunday, well, we're going to be doing some long-term deep dive analysis on this video. And with that said, without further ado, I will always want to be wishing you well, always want to be wishing you the best, the happiest of the happiest. And also, before I get into it, I want to say a massive thank you to everyone who reached out to me yesterday, especially Patrick, because I've been having a lot of problems with allergies, and so many people have hit me up and with phenomenal suggestions, and they've actually worked. It's actually worked. You know, I feel fine today. A little bit of lack of sleep, but hey, I'm not sniffling up, so that feels a lot better. So again, I want to say massive thank you to everyone who reached out. Really did help. And with that said, let's teleport into the live stream right over here and get deep and down and dirty into this Bitcoin analysis. There we go. Starting off with the daily right over here on GDAX. Well, we just go over to Bitstamp. It's all the same shit. Still stuck in this range. Intermediary time frame range is basically between the yellow 21 exponential moving average right around 5130 and our resistance overhead right around 5300. You do see this blue 377 exponential governing price action, which we did kind of test a couple nights ago on this wick up to 5300. So I would even go as far as saying that if Bitcoin were to even tick above 5300, we're likely to have a run back up to prior highs and likely beyond at that point. If that's going to start to really tick on a lot of our higher time frames, which we'll go over in a little bit. But for right now, while Bitcoin's kind of down around this region, this is our major resistance. You can all see that the red 10 moving average is starting to really curl over, getting a little bit of a negative slope. So, you know, a couple of major things coming in this area. Obviously, yellow 21 exponential moving average supporting price action. So that means if we were to actually break this area, either confirmed by having a daily total close below 5130 or just taking out the bottom side of this wick right here, I believe would be good enough for me. Right around, let's just call it 5,000 flat. Then I would be looking for a move down into this kind of liquid region right over here, right around about 4750-ish area. And actually, if I put on my drawing tools, whoops, not that chart, this chart, there we go. I have this area marked out right over here, which is exactly where I'd be looking for if Bitcoin did take a little dippy dip. So again, I would be looking for that scenario if we either close a daily total below 5135 or if we just wick below about 5,000-ish area on price action. I think that would probably be worth a trade. For full disclosure, I am short right now. I actually even added a little bit on this short, but this is more of a short-term time frame type thing. Just adding on the close of yesterday because, well, when we close a little bit of a doji total like this, I'll put a little bit on that. Again, very small position in the overall grand scheme of things. I actually did not add that position on my main account, only my streamer account, just because well, it was last night, up all night, couldn't sleep, so. See a little bit of a trade, why not put on a little bit more risk? Why not? But of course, to be very clear, if we even take back above, 5,200, sorry, not even 5,200, but about 5,180, I'll take that position off. I'm happy to. That's, that was a little bit more of an aggressive position, looking for a breakdown sooner rather than later, which if we bring up our oscillators, we do see that daily Stokes are still headed healthily down. In fact, they are kicked well out of the bullish control zone now, breaking this support trend line along the way, of course, and now getting down into almost the bearish control zone for the first time in, Jesus Christ, since March. Yeah, early March, so about a couple of months ago. Not only that, but we do see daily RSI kind of bouncing around well below the exponential. So, here's the thing: even if you are bearish, it actually would not. It wouldn't really set things off too much if Bitcoin would actually pop back up and test this region as you typically see it do. It doesn't like to stay away from this exponential for too long. You do see it here and there, but you can say that this is certainly one of the longer times. On top of that, we did have daily dildo Jewel sell signal right over here, and more importantly, if you did watch the Jewel video yesterday that I uploaded, which by the way, it is on the well, it's not on sale, but it's basically the price is going to be raised at the end of the month. So it's like kind of on discount, I suppose, which I've been doing a terrible job of explaining, but hopefully that video explains it, except I think I didn't even, the funny thing about that video is I didn't even talk about that it's on that I was going to do that. But anyways, that wasn't the point of the video, is just kind of showcase what it's doing. And we did get a sell signal on the Jewel right over here. And more importantly, if you did watch that video, you know that this is typically a support and we're actually breaking it. And we spoke about that actually yesterday during that video, because Bitcoin had already kind of come down and tested it right over here. Well, if we're going to pop back up, retest this area and then break it and then come back down, it's more likely to break, just like a traditional trend line. And speaking of which, we actually do have this guy red as well, which Bitcoin had been running up since March. So finding its resistance along there, getting the sell signal as well, and down. So The jewel is actually kind of in free fall right now, which does make me actually think a little bit more continuation. But like I said, this is a time to be agnostic, especially on a weekend. I kind of broke my own rule of taking a trade on the weekend. I also broke my own rule of trading against a golden cross while we're above the 20-month exponential moving average. If I'm going off like the straight textbook way, this is actually a long right here, to be quite frank. It's just the other things that I look at, especially with the CMEs, that make me a little bit more apprehensive with that. So with that said, let's go over here to the 2-day, see what's going on in the 2-day. And this is kind of where I start to get a little bit more interested in this play, and that's because Bitcoin not only closed a nice shooting star dildo right over here, but follow through on increasing volume and breaking the 200 simple and the 377 exponential moving average on the way, and more importantly, on the next 2-day dildo, the one that we're currently working on right now, we've already come back up on that nice little hunt yesterday, all the way to 5220, and so far rejecting from, and you can see that you can barely see the blue 377 exponential in the background, but you can see that it is resisting price action so far, and this would be considered. This looks like a rejection to me, and the fact that we're still below these moving averages tells me that we're going to respect them and have some more continuations most likely. Going off the 2-day Stokes, we do see 2-day Stokes crossing the downside, and that is confirmed cross now. Next thing I want to see is I want to see them get below this critical zone right over here. Again, this is just the same area that's called some major tops ever since we put in 20,000 in December 2017 right over here, then 12,000 in February last year right over here, then 10,000 in May, then 8,400 in August. All major dumps. Major dumps that if we measure them out, were like what? 30% dump right there. What was this guy right over here? This guy was, about a 40% dump. And then, of course, our double top right over here is going to be even more, right? Yeah, about 47%. So, 50, 40, 30, if you wanted to make it just easy. Overall, we also do have bearish divergence. Bearish divergence on the RSI. If we can bring it up, that'd be even better. Between this point and this point, and also trending below the exponential, which usually when I see something like that, I want to see a retest back down to the 20-month exponential. And where is that hanging around? Actually, 48.50. So I actually would be looking for that to provide support on the first pass if we do get down around there, because the 2-day chart seems to get a lot of play. Actually, the 2-day chart does seem to get respected. I think even more so than the daily. So if we do get down around here, I would be looking for a bounce anywhere in this territory between about 47.50 and 48.50, and I kind of like stick with that one just because it is a time to be a little bit more cautious and not the time to be gung ho. Of course, 2-day jewel. I mean, is this a sell signal? Kind of, not really, not something that I'd be interested in taking, but it's really the 3-day that we're all after right now. And let's get on to the 3-day right now. I'm kind of discussing with myself if I want to cover the lower time frames or the higher time frames first, but we'll go on with the higher time frames. 3-day just set itself in stone, so we do have a confirmed 3-day dildo Stoke cross the downside. This is with my settings, so keep that in mind. I'll share my settings right here, 1436. There you go. And this has also called some pretty nasty drops within this territory for the past year. Same ones that we looked at on the 2-day. Naturally, they should kind of line up with each other. But more importantly, this one really just spent a lot of time kind of snaking around and putting in time in this area, getting like pretty fucking high as well. Traditionally speaking, this is the highest that we've gotten in about a year. And crossing down, yes, I do want to see it confirmed below this, below the critical zone right here for it to like have a full-on signal. But putting that in confluence with also the 3-day RSI losing the exponential right here, that does make me think that we're more likely to come into pressure here. Support very obviously right around 5,000. That's exactly why I'm kind of outlining that area, saying, hey, if Bitcoin even ticks below 5,000, preferably on Bitstamp actually. The other exchanges have these very nasty wicks, and Bitstamp just looks so clean, playing off these moving averages. Then I'd be looking down around here, right around this 4,700-ish area. It's going to be our next big support. Now, don't get me wrong, though, because there are some competing narratives here. We do see the yellow 20-month exponential moving average crossing the upside of the green 55 exponential moving average, which is typically a very bullish cross. And the last time that we even had one was way over here in... what was this? October 2015 at around $250 price per Bitcoin, and that led Bitcoin all the way up to about $20,000. So if I do put a lot of weight on it, and the fact is that we actually do have one right now. Not only that, but we do have a confirmed golden cross on the daily with the exponentials, which is very powerful, extremely powerful. However, if we were to break down below this area, the 5,000 area, I'd be looking down around 4,700. By the same token, if we were to kind of tick up, I would be looking for a resistance right around about 5350-ish area, kind of the area that the area that was the impetus for taking my trade to the downside. So this is really a time to be a trader, not necessarily an analyst, as the price action is going to tell you which way is the next one to go. Very similar to kind of what very similar to what we saw last week. Bringing up the 3-day jewel, however, I think this is the one that that I'm paying the most attention to. And the 3-day jewel is having a negative slope. It is kicked out of the critical zone, and we do see red in the background. So we see all four things. We see the light blue oscillator into the critical zone. We see red in the background. We see the light blue oscillator get a negative slope and get kicked out of the critical zone. So all four things present right there. Looks like I'm probably going to get taken out of my trade really quickly right now. Let me actually just make sure right now. Got my other screen over here. So nice. Alrighty. Okay. Oh yeah. Okay. All right. Fair enough. Okay. So yeah. Looking at this, yes, that actually would be a perfect setup. But here's the thing. And if you've been following these videos for the past, the past week or two, is going to be really annoying because I'm going to go over this once again, but I do want to do a thorough job as it is a Sunday, so it is a long-term analysis day. And each and every time that we do have all those things present where the light blue oscillator gets into the critical zone, we flash red in the background, and then we get a negative slope on it and then get kicked out of the critical zone, that does cause some pretty nasty drops and also some pretty, awesome bottoms in the history of Bitcoin. Starting with this first one right over here coming off the parabolic top for about 70% down. Not bad. Then we got this guy right over here for a clean 37% down. Then we got this guy right over here for another 30% down right over there. Then we got this guy right over here, and we got another 30% down. Then we have and I want to pay special attention to this one right here. We have this very small one-off one where it triggers it where. Here's the thing, is that when it flashes red, the light blue oscillator is still in there. So, okay, yeah, it kind of counts, but just for a second, it actually does get this move, which is like what, almost a 10% move, which is significant. But the thing is that I'm going to go over this in just a second, but the setup for this one was significantly different than the other ones, right? Where the light blue oscillator barely even, sorry, which one is it again? It's this one. Yeah, this one right here. The light blue oscillator just barely got into the critical zone. Well, you can notice if I pull out, then when we do flash red in the background, the light blue oscillator is getting really deep in there, towards the 90 marker. And the interesting thing about our current setup is that we actually did not get that deep. It's actually quite shallow, very similar to what we just looked at, which only amounted to about a 10% drop down. Well, if you take a little measurement of our current move, we've already had about a 10% drop down, actually even more than that. So, I do put weight on that, and it does make me a little bit more apprehensive with it because all the other ones are getting really, really deep in there, which just shows that it's, more and more overdone with the price action. It's kind of what that oscillator is implying, and due for a correction. Well, the only example of that we have that's kind of similar to what we have going on right now would look like it's actually perhaps already done, but just kind of go back and fill in the rest of the gaps. We got this guy right over here, another 40% drop down. We got this guy right over here, another 38% drop down. We called the bottom in 2014, 2015. We called, the top right over here. You get the point. These ones are going to be significantly different just because they were coming off parabolic tops, so not really fair to measure them against something that's, just a little bit of a rally over here. Obviously called the bottom of, or so far the bottom of 2018. 2019 cycle right here. So that's the thing, is that yes, we did get that signal, but is this going to be a good one or not? Because this is significantly shallower than the other ones that we looked at. All of them except for the one that didn't only had about a 10% move to begin with, so of which we've already kind of seen. But going off the other oscillators, I actually would say that it's more likely that we do head down. If I had to pick direction here, I would say down. I feel like a lot of people are bullish. The biggest thing making me not think down is that there are an exuberant amount of shorts right now, which let me just bring up. I forgot to put this page up right here. Just 1 second. But going off this right here, we do have about 30,000 open shorts versus 18,000 open longs. I mean, this is squeezable. This is very squeezable. We can even go look at their entries, right? Let's bring up the charts of the shorts and get all this off and go to a daily. So most of these people putting on their positions starting on the 21st of April, right? 21st of April. Well, where was price on the 21st of April? 21st of April was right here. So actually, to be fair, they're all in profit. But here's the thing. If Bitcoin runs back up above this 5,300 level, takes out this wick at 5,300, we're going to hit all those stops and we're going to go back to the prior highs and probably beyond. It's going to be like fucking rocket fuel. There's a lot of people in at that price point. Now, here's the thing. On top of that is that this is also a little bit fundamentally driven or news driven. Get the good old news, because what's it called? The New York Attorney General is basically potentially bringing up a case against Finex and Tether, and or I guess just Finex mainly. And Finex came out the other day and said, up until yesterday we were cooperating, but And everything after that is a fucking train wreck. So I won't get too much into that right now. If you want like news and stuff like that, check out Crypto Zombie. Great guy, and he actually puts out like some damn good news. And I actually know him, K-Dub. He's a cool dude. He's super. He's just a really nice guy, and he actually really cares about like putting out good information. So check him out. I'm sure that he'll do like a really all-encompassing story on it. I'm not the person to go to for that. He is. So I'll just kind of leave it at that. Go back to the daily over here and say, hey, if you want to synthesize it down in the in basically the medium time frame look, I'd say as long as we are closing above 5130 on a daily time frame schedule, or if we do not take out 5,000, then just trading below, not even like waiting for a close, then likely the path of least resistance is actually going to test back up on here towards 5,300. So. Again, if we do break this area, coming down to likely 47.50-ish area, give or take a few bucks. If we do take out 5,300 to the upside, then I would be looking for a move to the prior highs and likely beyond over time. But we'll kind of measure that. We'll come back to that one if and when it does happen. Let's go over and check out CMEs, which have not been trading over the weekend, but very, very different than spot charts right now. So this is why I typically don't care about. This is typically why I kind of avoid weekends, because CME charts are just significantly more easier to read, and they are they're just more accurate. They're just more accurate because there's actually a significant amount of volume being done on CMEs nowadays. It wasn't like it was before, back on over here where there's barely anyone trading it. Now there's actually people trading it, and it does seem to run the markets. And that's also another reason why I do believe that we don't really get like major moves on weekends. Yes, we get hunts here and there, but we don't like break a range is what I'm trying to say. We don't break a range, which is the more important thing to realize, which as I'm which I'm now actually just checking my phone. My phone's going fucking crazy. Oh man. Rough life, my friends, rough life. Anyways, looking at the daily on CME, we had a pretty bad close on Friday. Closing below the 200 simple right here. That's a white moving average. And also rejecting the, just clearly fucking screaming past the 200 exponential moving average right over here. We also see daily Stokes having a fresh cross down. But here's the thing. We are kind of in formation, and I would expect actually price action to bounce off this area. So when we do see the CMEs open later tonight at 7 p.m. Eastern time, I'd imagine that the Stokes over here probably do open up on this area, and then we'll probably see a bounce. So that's kind of why I think it's actually a possible time where we might see a move on a weekend. We also see obviously bearish divergence, but I think that's the easy part of bearish divergence has already played out. And again, that was kind of my impetus for taking my short beginning at 5,300. This guy, right over here. My streamer account did not get a great position, although these were on the June futures, so they didn't have a they had a discount of like $20 or so. But more importantly, I was mainly on my main account. Anyways, with the way that's kind of looking right here, we do see that we actually are kind of doing something like this. We kind of made a little bit of a rising channel right here. And we can make a measure move on this now, can't we? And let's just do this one out. And technically, we would have already broken it. And where's this measure move pointing down towards? 4,700. So, and CMEs are trading at a discount. So you'd imagine that if CME is going to have a measure move down around there, that'd probably put spot somewhere like 4,750. So it does look to me like we actually did we break this on Friday or not? Look at the volume on this. It's lackluster. It's non-existent. So that's very difficult to judge, and not something that I really want to be going off of. But what really is happening is that because Friday was expiration for CMEs, everyone already made their trades over here, and after that, no one's trading anymore. So that just dumps off. Let's see, what else do we have to look at? Yeah, daily RSI losing the exponential on this, and daily Jewel, is it telling us anything? Kind of a light reject from the pink, but not a signal in and of itself. And you do see that we have a nice trend line forming here actually. So and it's also confluent with this white signal. So if we were to pop back down, I'm looking for support in that area. So I wouldn't get too gung-ho about shorts even if we do turn down. It's got to be careful in this area. It's the area to be a trader, not a not a hero. Not a time to be a hero. Going on to the weekly, we closed a pretty nasty weekly on the CMEs as well. This is confirmed. This is not just to be considered a rejection of the green 50 exponential moving average, but also a retest of our 2018 lows for basically like most of the year. And Bitcoin rejecting pretty harshly off it actually. I mean, looking at the volume, actually not too bad. But my point is that even if we just take out the low of this dildo, the last weekly that we closed at 49.30, just by taking below it, don't even need to wait for a close below it. Very likely that we come back down here and test the yellow 20 exponential moving average over time, which is where about 45.50, and it's gonna be rising on the next tick, of course. But that's also gonna be confluent with this trend line that we kind of broke out of, that we were consolidating under for the past year or so. So, if Bitcoin does want to turn down, that's kind of where I'd have my eyes on ultimately. I don't really think that I'm of the camp that thinks that Bitcoin's going to just do a massive red dildonator all the way down here in just like one fell swoop. I think that's a little bit less likely. But a healthy pull, I mean, this actually would be considered a healthy pullback, to be fair. Even if you are bullish, like this would be a healthy pullback to come back to the weekly 21, test it after being so long away from it. That's completely fine. There's nothing wrong with that. Not only that, but we are going to be fighting some hidden bearish divergence between our prior highs right over here and this high right over here. You can see the RSI also getting way up there. These guys over here significantly lower, although that is on CMEs. So let's go to Bitstamp and see if it's any different. Pretty damn similar. You can see that I have a trend line in here. I don't know where that's coming back from. Okay, yeah, it's coming back from kind of our highs in 2014, 2015 on the RSI. So kind of rejecting from it on first pass. Again, likely stuff, right? It's not a death sentence, but it would, I mean, on a weekly, the stakes are big. Speaking of, we do have weekly Stokes over here getting really high. Again, areas that we haven't seen since 2017. Weekly RSI way far away from that exponential, which it really doesn't like to spend that far away from it for that amount of time. I mean, even I'm just trying to look back in the past. When was the last time that we spent 3 months away from this? Maybe maybe start it right here from December to March. Nope, that's 3 months. Yeah, it's usually about 3 months, 3 to 4 months, I'd say. On top of that, weekly Jewel, do we have anything to be aware of here? Not really. Looks strong, but again, very far away from the signals. So usually you want to see them bunched up, not too far away from each other. So that's kind of my point. Not only that, but we're going to be closing the weekly tonight, right? And the weekly is very important right now because the Trollinger bands are actually going to be doing a damn good job of getting this price action, as we've been trending outside the top Trollinger bands for the past 3 weeks, and we're working on our 4th week right now with the chance to actually close above. And what this means is that if you're familiar with the Trollinger bands, then what I'm looking for is a next response to how we close this weekly. If we close it above the top Trollinger band, which is currently coming in around 52.90, then I'd be looking for continuations, probably much higher, towards 6,000s over time, like not tomorrow, but over time. If we end anywhere below 52.90, then I'd be looking for, technically you would incite a retest back down to the brown 27 moving average, the skid mark moving average right over here, which is significantly lower, right around 42.50-ish area, which should be confluent with our exponentials actually. If we put on the exponentials right here, whereas the 200 exponential moving average, this purple moving average right here, beautifully put, and you're gonna imagine that this next tick on the Trollinger band is gonna bring that one in confluence with that area. So overall, it's like it'd still take its time. Remember, this is a weekly; it's not going to happen at the snap of fingers, but it is, it is certainly on my mind's eye. Not only that, but you can see that we are the way that it's situated right now with the weeklies. If we close anywhere here or lower, this is going to look like we're really respecting this cross on the exponentials. Between the green 55 and the cyan 89 exponential, which that's technically a bearish cross right there. And if we do get rejected here, that's gonna be insightful. It's gonna tell us that the bots and algos want to be sellers on this and they want to play it out. And so where's our target gonna be? It's gonna be right here. It's gonna be right on the 21, which is where 45.50. It's probably gonna be taken up towards 4,600 on the next one. So keep that one in mind. Let me just make sure. Jesus. All right, fair enough. So yeah, that's what I have my eye on right now. Of course, I just want to temper what I'm saying, because as a trader, I don't want to get too damn bearish. And when I say too damn bearish, I mean like trading for new lows, even thinking about new lows until this purple 200 exponential moving average breaks right over here. We spent 5 months grinding this area out, testing it out before actually breaking it onto the upside. So theoretically, it should be strong support if we were to come back down and test it. By the same token, I will directly take some major shorts, looking for massive new lows towards the low 2000s area, somewhere down around here. If we break this white moving average right around 3500, so the first warning shot and maybe like a small starter position would be if we broke the purple 200 exponential moving average on a weekly, and then the next one, the full on no holds bars signal would be if we broke the white 200 simple right here. So that's kind of what I have my eyes on right now. You can see that it's. Until we actually violate some of those areas, this is just to be considered actually a healthy pullback by all means. And again, I'm speaking directly as a trader, not as an analyst, not as someone who has an opinion, not as someone who technically doesn't really have any, any accountability with what they're saying, because they're not going to be taking the trades. This is coming from someone who's taking the trades. I'm showing you right here, right now. So again, there you go. Do I feel good about that? About that short position on the SEPs? Might as well play it. Very small. Very small. Okay, cool. So we spoke about all of that. Let's go quickly onto the monthly. I should have done the lower time frames first, but now that we're talking about the higher time frames, might as well just go here. Monthly, fucking around on the yellow 20-minute exponential moving average, and we have 2 days left until the end of the month. 2 days left. So what does that mean? That means that this is going to become of the utmost importance. Do we close above or below it? And let me explain the importance of this for the new people here. This is what I'd use when I was a professional trader on the floor of New York Stock Exchange Arca to judge if a stock was generally bullish or generally bearish. If a stock was above it, the 21, then generally bullish on the long period of time. If we're below it, generally bearish. You can see right now we are technically below it. About $100 below it, a little bit less than about $80 below it. Now we've all seen crazier moves than $80 in the span of 2 days. So, it's still too early to really be calling something. But if Bitcoin does end above it, I would be a little bit more long-term bullish for a move into the 6,000s, likely like about 6,200, and then probably beyond. Personal opinion would be about 7,000. If we end below it, it's not a death sentence. We do have a bearish cross right here between the red 10 simple and the yellow 21, which would be interpreted negatively. It's going to depend how far we reject off of it, like where it would actually close. But if we were to like really close way down here, then it's going to start to look kind of nasty. But it would likely incite a retest down into the mid to low 4,000s is what I'm trying to say. In 2014, 2015, Bitcoin retested the 21 exponential multiple times after losing it and putting its red dildos of capitulation right over here before actually taking it onwards and outwards to the upside, which actually perfectly timed this bullish momentum. So that's the thing is we're coming back and retesting it for the first time over here in 6 months. Bitcoin tested it once, twice, thrice, 4 times before breaking it to the upside in 2014, 2015. Again, it doesn't mean that just because we did that back then, we have to do it now. No, but it does. Usually, in my experience, this area gets sold on first pass by the bots and algos just because. So if you are a scalper, I don't think it's the word scalp. In fact, you can see already if you sold anywhere above the 21, you're about $400 in profit. Sorry, $500 in profit. After going from high. So again, it's a high quality play, but the easy play is already out. The next one takes a little bit of waiting, a little bit of patience here. Monthly Stokes also crossing the upside or want to cross the upside. We saw the same thing in 2014, 2015 in June right here. Where was June? June was right here where Bitcoin marched up to the 21, got rejected and back down for another 32% move. Kind of similar to what we saw in the Jewel. Although remember, the Jewel is it doesn't look like the other ones, to be frank. It does not look like the other ones. So does that mean that it's right to look at? I'm not sure. I don't have an answer for that. Looking at all of our other indicators, I would say that it does look like we have some more downside, and especially looking at the CMEs. But I don't want to FOMO it out. And also, this is not financial advice. I'm not a financial advisor. So there you go. Monthly RSI, coming back and testing the exponential on it, kind of in the neutral zone. We haven't tested this area in a very long time, about a year. Similar thing in 2014, 2015. The first time that you tested, likely going to reject on it. When was that? July 2015. When was that? Basically on this dildo right here before another 30% move down. So again, just another thing to be aware of as we do kind of go on off that. Does that sound like a literal broken record? Jesus Christ, man, so embarrassing. Okay, going on to the lower time frames now. What everyone loves, the lower time frames on a weekend, because what else do you have to do besides fucking gouge your eyes out with spoons? Well, you can see that from a very low time frame perspective, 5080 is essentially our support. to the downside. If we do break that area, very likely that we will get that follow through to make some new lows down around the 4750-ish area. So there's three ways of doing this. I could see either the daily dollar closing below the yellow 21 on the daily, that's 5130. Then I'd be bearish for a move down to 4750. Or I could see a 3-hour closing below this 200 exponential at 5080. That would also kind of incite the same things for me. Or if price action just got below 5,000, like just even ticked below 5,000, not even waiting for close on an exchange like Bitstamp, not the other ones as they kind of look a little bit different, then I'd say yes, it's very likely that we do have that. Although that would be like the least precise measured way of doing it. So yeah. By the same token, you can see that we do have the 21 exponential and also the 200 simple governing us to the upside. So if Bitcoin were to even take out 5,200, likely that we do see much higher. And I'd feel pretty confident with saying that. If Bitcoin takes out 5,200, we're probably going to find ourselves back into this region, 54, 55, going over here to the 4-hour. Yeah, 4-hour looks okay, actually. 4-hour Stokes up and erect. What about 3-hour Stokes? 3-hour Stokes actually very erect. What about 6-hour Stokes? Fresh cross up. 8-hour Stokes, fresh cross up. 10-hour Stokes, fresh cross up. 12-hour Stokes, still down. And then every other time frame is going to be down. So yeah, those medium time frames have not been getting it too well, to be clear. But on a weekend, you never know what's going to happen. So that's what I'd be comfortable with saying. Above 5,200, 3-hour diddle close above 5,200, likely marching our way back to 54, probably 55, probably prior highs. 3-hour diddle close below 50.85. Start the avalanche, baby. Start the avalanche. So yeah, that's essentially what I'm looking at over there. I'm curious what the hourly's doing, as the hourly has been pretty damn good. Hourly Stokes coming down. These ones change around quite a bit, but below all major moving averages here. Got the death cross on the hourly. It's bad. So yeah. Okay, so I'm gonna go over now. Did I want to talk anything more about CMEs? Let's go to 4-hour CME. Yeah, okay, so here's the thing about CMEs. Whether the next like easy trade, in my opinion, for a scalp, not for like a hodl for the rest of my life, but for like a little bit of a scalp, would be judging where spot exchanges are in relation to CMEs when CME opens later tonight at 7 p.m. Eastern time. Is spot trading below? Then I'll probably be a seller on the gap fill. If spot is trading above, I'll probably be a buyer on the gap fill. Again, for just a little bit of a scalpy scalp. If it does turn into a sell, that's likely to have some more long-term implications. If it turns into a buy, actually, I would say the same thing. I mean, if Bitcoin takes on to the upside here, I do think that we're going to see fall through on the monthly, and then we're going to see likely, extremely likely 6,200, but probably even 7,000. Where am I getting that? Well, let's go on over here to the BLX index and explain the matrix, the good old matrix, which if I put on the drawing tools right here, we do see that we have all these crazy lines. So let me explain them. These dotted trend lines represent support trend lines for parabolic market cycles, each and every one in Bitcoin's history, starting off with this one in 2010, 2011, broken in 2012. That becomes our highs, our governing factor in the next market cycle right here in 2013 and 2014. By the way, we retested very soon afterwards, actually after breaking it right here. And how much of a move down do we have after that? Yeah, about a 21% move down. Then we create another support trend line for the next parabolic market cycle, anchored in what is it right here in 2011 and 2012. That gets broken in 2014, 2015, right over there, and that becomes the highs of our next parabolic market cycle in 2017, 2018, right over here. By the way, not only that, but we come back and retest that one very soon afterwards as well, right here. And what happens after that? 27% down. Then we create another support trend line for this past parabolic market cycle right over here, anchored in 2015 and 2016, gets broken in 2018 on that massive red dildo party below 4,000, also crushing the 200x benchmark moving average along the way. And does that become our governing factor going onwards and upwards from here? Perhaps. Whoops, almost hit some off. But where did that become an in around? Well, actually the 7,000 marker right here. Right around 69 to 7,000. So I do kind of like that. And I actually want to try something else here. I'm going to do something that I actually haven't shown yet. Let's see. Yeah, something like this. Yeah, there we go. So this trend line right here that we broke out of on that massive green dildo, the good old Hulk dildo on 1st of April, this is actually quite important because you will notice that we have a similar setup in 2014, 2015 market cycle where we have two of these solid trend lines. The first one holds in the consolidation before the bull trap, and then it kind of governs the lows. Well, we have the same thing right over here, consolidation, bull trap, then basically gets our lows right here. And then the second one, essentially, once we break out of it, that's the beginning of your bull market. Actually, perfectly timing once again the upwards momentum. Well, we've actually technically broken out of that one already. No matter which way you cut it, whether you're taking the more aggressive one or the more conservative one, which this one is the more conservative one right here, which would be lining up around that 21 exponential moving average. So if we were to come back down, I would be looking for Bitcoin to base off this trend line. Actually, I don't believe that we break this trend line to the downside. So that also gives you an idea. If you are a super bear, if you are like a super bear, that could give us an idea of how long your targets might take to be hit. But if you're looking down around like low 2000s. That could be January. If you're looking, if you think that we're going to bottom at like, if you think that we're going to double bottom at 3,000, that could be October. If you think that we're going to bottom at, well, let's go for like the super bears, 1,000, 1,300. That could be October 2020. So yeah, again, am I super bearish here? Do I think that the lows are in for Bitcoin? I am about to discuss that. So let me get into this conversation now because there are actually a lot of fundamentals that suggest that the bottom are in. Tentacles, I would say that tentacles say that we're kind of putting maybe a top right now. Or we're definitely getting extended, whether it's a top here, it's a top at around 7,000. Oh, by the way, I forgot to do this. If we put these guys back on and let's just kind of use our imaginations and say, what if Bitcoin did test this area up here, and what if it did reject from it and have another one of those 30% drop down moves or 40% drop down moves confluent with the jewel? Well, that not only put us at the 786 Fibonacci retracement, but also a 40% move would put us right along this trend line as well. So I really do like that. And at that point in time, the 200 exponential will have been given time to get around there. And so if we were to do that, I actually would be a little bit more confident that in saying that perhaps the lows are in. But right now as a trader, I want to remove myself from that discussion. I can show you both ways. Technicals, it's certainly, if I'm going off just straight technicals, I don't think that the bottom's in. If I'm going off fundamentals, I do think the bottom is in. I'll put it that way. Now, which one matters more for bottoms? Well, actually fundamentals. So yeah. Okay. Let's go through this. All right. So let's bring up some price model charts right over here. This is a Bitcoin price model chart, which just has a bunch of different data points on it, a bunch of different measurements of market cap, realized cap, top cap. You get it. MVT signals as well with different moving averages on them. All very very useful stuff. And as you can see on the past prior market cycle bottoms, you see all of these guys converge on each other, like right here in 2012, like right here in 2013, and like right here in 2014, 2015. Well, what's going on in 2018, 2019? Actually, you see them all converging on each other. And not just converging on each other, but they've flattened out their slope. They flattened out their slope. Oh, let's see. Can I get this? Is this gonna work? Oh yeah, this does work. That's awesome. All right, so now I want to show something else. All right, so, oh, whoops. Is that this? Okay, yeah, there we go. Okay, so here's what I want to show now, and this only line that I have, this brown colored line that I have on is called the delta cap. All it is it's just I believe it's the realized cap minus the average cap, which, as you can see, when price touches the delta cap, does a damn good job of calling lows. And in fact, more importantly, we never really get below it. We do have a one-off over here, well, a couple of times, but basically once it gets around there, that's putting in lows. So what have we done in 2018, 2019? Well, if you can see, we have already touched this. So that's number one. Let's go over here and check out. Let's go check out the good old. Oh yeah, this is what I want to look at. The Bitcoin's miners revenue, which I'll put it on the 2-day, and there we go. I'll bring this chart up here, and on its own, it probably doesn't mean much. Basically, it's just showing that miners revenue goes up over time. But if we make a relation between this and price action, which we can certainly, or sorry, first before we do that, let's actually chart this one out. So you can see that each and every time, Jesus Christ, man, how do I get Instagram notifications on my computer? That is encumbersome, man. That is encumbersome. Okay, great. And what the hell is this? Okay, there we go. All right, awesome. Okay, so you can see that each and every time that we put in a parabolic run on the miner's revenue, it puts in like kind of a trend line, which once we break out of it, that becomes the lows of our next market cycle. So we put in this first one right over here, come back down, base over here. Now let's overlay this with price action and see how price action reacts. So we have to use the BLX index, and I'm gonna put it on log scale. There we go. Okay, so we have this first one right over here. Where do we base off on? Off of this parabolic blow off top right here, on this trend line. Then we put in the next one right over here, come up, put in another run. Where do we base off of? Right on this trend line. Then we have another parabolic run, put in this trend line, we put in this trend line right over here. Where's our lows of 2014, 2015? Right along here. Then we put in this trend line right over here in our 2014, 2015 parabolic top. And where does that come in around? Around our current low. Actually, if you kind of measure it out right over here. Now, you will notice in 2014, 2015, the miner's revenue does grind this low out, but it never really breaks it. And so we could very easily return to the lows in 2019. What year is this? 2019. Oh, fuck. Jesus Christ, man, I'm tired. But it would imply that the lows are in. Not only that, but we can actually take this one step further. And you bastard, stop doing this, motherfucker. That is so annoying. Let's try this. Now I got you, figured you out, little fucker. All right, so let's put on what's called the Krown multiple, which is essentially just a moving average on the miner's revenue, a moving average of the miner's revenue. And unfortunately, it really does not look good when I scroll it out all the way over here. But basically, if I bring this up, it'll make more sense. When the blue oscillator gets into the green zone, that typically calls lows. Now you can see it's not very good at calling highs just because it stays in this red zone for too long for it to really be, useful in my opinion. I mean it's decent, but overall it would suggest that the lows are in, because each and every time that this light blue oscillator gets in there, well, what happens? You can see this low right over here. This low right over here, this low right over here, this, where's the next time? This in January 2015, right fucking there. And when after that, right over here, September 2016, actually right before the next big leg in that bull run. And what have we done in 2019? We have gone deep inside that green territory, which would also be suggesting a low. So some fundamentals certainly suggesting lows. There is one fundamental that I would say is suggesting that it's inconclusive is what it is, but it would say that the low is unlikely to be in. And that's the Bitcoin network momentum, which let me just make sure that you can see this properly. Make sure that I'm recording. All right, good thing to do when you're like an hour into recording a video. But here we go. Okay, great. So we have Bitcoin's price action in the background. We have this oscillator representing Bitcoin network momentum right over here in the orange. And basically what happens in the past is you see that the network momentum gains momentum. Then what do? We put in a support trend line for the bull market cycle where it stops really gaining momentum, right? It puts in a support trend line right here. And then that essentially calls this rally all the way from, well, I can't get the price point on it, but like $8 towards, well, shit, all the way up here, technically speaking, at $1,000. Nice trade. And once we break the support trend line, that's when your bear market starts. And you start, you're gaining momentum to the downside, essentially. And when do you put in your lows? Is it when this oscillator gets super low like this? No. That's when price action is still about halfway from its actual lows. When you put in your lows is when the momentum gets higher than where your last support trend line was for your prior market cycle right here. You can see that exactly at this point right here is where the low was put in, right around the time that you actually gain more momentum than you had in the past prior bull market cycle. So it's building over time, and that kind of makes sense intuitively speaking. Then we're gaining momentum, then we do another bull market cycle, right? We put in another support trend line right here, and remember, if we're going to bottom out, we need to get above this. Well, are we above it right now? We're actually pretty far away from it. We're actually pretty far away from it. So Bitcoin was in a downtrend the whole time, even when this was technically still like gaining a little bit momentum up. So we need to make a higher high over this guy right over here for it to be even on the radar, and then preferably above this horizontal, this support trend line right here, or former support trend line. So that would be kind of a fundamental going against that. So you can argue both ways, and it's more mental masturbation than anything. As a trader, you got to be able to trade in both bearish and bullish environments. Judging something like that, it's like if you're wrong, you're disastrously wrong. That's the problem with trading like that, and that's why I don't like trading like that. Shit, just trading a weekly is like hard enough. Trading for like years and years and years. Good luck, man. Good luck. But we do have fundamentals. I would say that most fundamentals say that the bottom is in, and just like a couple of fundamentals say that it is unlikely to be in. We can also show this over here. Good old MVT signal rearing its ugly head once again. Put it on the daily, and what do we got? We are wrangled below this orange moving average on it, which, of course, what does that mean? Well, this thing is yet again another actual fundamental indicator, which basically calls tops and bottoms very damn well. But what does it do? It's the network value divided by the daily transaction value. And when it flashes red, calling tops. But you'll notice that when it flashes red, it ain't perfect, because it'll flash red and then stay red for like weeks. Right over here, an example. We flash red when Bitcoin's about 7,000. It rallies up another 1,000 points towards 84. And it's not until we actually break this orange moving average on it right here where the bearish momentum begins. Now, the bearish momentum was like well underway once that happened. But my point is that if you want to be conservative, that's kind of what I'm looking for. And this is consistent amongst the other ones as well. If we see those two things, then I look at my other oscillators to kind of get insight into whether that's going to be played or not. And first I go with the Stokes. Stokes are going to tell you relatively fast, cross down, back below the critical zone. Okay, tick 1, tick 2. Daily RSI below the exponential. Okay, tick number 3. And then daily Joule, if I can bring it up, I want to see it get into the critical zone and then get a negative slope. So 4 and 5. Now let's go into the more in the more immediate times. Well, obviously it didn't even get into the critical zone here. It's just pinned down. But we see MVT below the critical zone, or sorry, below the moving average and in red. We see daily Stokes not in the critical zone, but crossing down and gaining momentum down. We do see daily RSI breaking the exponential, but that was broken a few days ago. So is this going to be, is this too easily gamed now? Is it even viable anymore? Maybe not. I think that there's more tangible indicators, especially the Joule, which I just feel more comfortable with because like I actually had a hand in making it, not something like this, which I'm sure is good, but I can't really verify it myself. So I would like to remove myself from that as well, but just kind of a fun thing that has been perfect in the past, regardless of that, fact. So yeah, again, let's go on and check out. Do we want to do some more long-term analysis? I think we kind of did all the long-term analysis, I think we did all the long-term analysis that I really want to do. If we want to follow this dotted trend line up further and further, this is why I'm like a long-term Bitcoin bull, because it rises up incredibly rapidly. I mean, just around 2022, it's already got a high of like 100,000 potential. Now that's a potential high. It's like, it's not saying that it's going to get there. It's just saying if we do get there, it's probably a sell is what it actually means. Do I think that Bitcoin's going to go to 100,000 in 2022? Probably not, but I do believe in Bitcoin long term. I will say that. Okay, what else we got? Oh yes, we got to go check out this Dixie. So Dixie is the dollar index, and basically because Bitcoin trades against the dollar, this is relevant. And you can see that Dixie is actually broke out of this ascending triangle, the same one that we had going on for the past I don't know, a year and a half, 2 years. No, about a year. And breakout looks good to me, and I do have measure move actually much higher. Now, maybe if you're bearish, you're looking at it like this, perhaps, but that we'd still have more to go. But overall, it's a breakout on the lower time frames nonetheless, and I would be going with a more bullish interpretation of this one actually, especially looking at the indicators we do have. Looks like it wants more to me. It probably does pop back down and retest these areas, but longer term it's bullish is what I'm trying to say. Monthly is incredibly bullish. I'm looking at this. I would be looking for a move, maybe even higher than where my measure move is. But my point is that because Bitcoin trades against this, we do have to be aware of it, because Bitcoin seems to have a nice inverted relationship with it. If we can plot Bitcoin in the background over here, you can see that Bitcoin started its like 3-year bull run in 2016. Well, Dixie put in its highs in 2016 and was in a 3-year downtrend all the way over here. towards February 2018. Well, when did Bitcoin put its highs? Like basically 2018, beginning of 2018. Bitcoin's essentially been in a downtrend ever since. Dixie's been in an uptrend ever since. So that's the difference, and that's kind of what I want to get out is that if you're looking at something like this, we have not just not just technical reasons, but also correlating factors between multiple assets. On top of that, we can make a relation between Bitcoin and what's the other one that I want to do? We could make it. Do I want to do this one? No, I don't. No, I don't. Not right now. Maybe another time. But for right now, that's fine. And just another thing saying, hey, be cautious in this area. This is a time to be a trader, not a time to be a cheerleader. Not that it's ever really a time to be a cheerleader, but you know what I mean. Again, to kind of wrap it up in the lower time frames, above 5,200, close above there on like a 2-hour, 4-hour dildo, 3-hour dildo, any one of those time frames. Probably looking at a move back up in here into the 54 and probably beyond. It's gonna have carry on it over into the daily, and then that's gonna say that the golden cross being played, and then we'll see carry on over into the monthly, and then maybe like a month, 2 down the road, we probably see like 62, 63. By the same token, if Bitcoin breaks below, what did I say? I think the 3-hour gets it best. Yeah, 3-hour 200 exponential moving average right here at 5080. I'd be looking for a move. First stab down to about 4750, 4800, and then lower over time most likely. But right now, the thing is that this is actually traditionally a buy when assets come down into this area on the daily based off the moving averages. It's typically a buy. So I am kind of going against my conditioning, but I think it's worth the trade right here, and more importantly, it's a very low risk trade because you don't have to. I don't have to risk all that much to find out if I'm wrong. In fact, I could have taken the exact equal but opposite trade. I could have taken a long and just managed my risk right below here. Not risking all that much, right? Not risking all that much, and that's what makes a good trade. And we're actually in a very unique situation right here where you can actually find those trades. You could put on a long or a short and be equally right, in my opinion. I'd say, yeah, you have good reasons. You have good reasons to do that, and it's completely viable. You can make the argument for both, is what I'm trying to say. Of course, with looking at the longs and shorts, that does make me a little bit apprehensive. It does make me think that any move above 5,300 is going to be just fucking massive rocket ship dildo to the upside, most likely. So I'll leave it at that. Okay, let's go check out the top shitcoins. What are they doing? Let's see if they have any insightful measurements to go on. Okay, so we got the move on Mr. Buterol yesterday, tested all the way up into my area of 165. What happens here? Well, we do have Stokes kind of snaking around, but what do they want? Daily RSI under resistance. Yeah, this one's difficult. If the daily on Mr. Buterol closes above 165, I would be bullish for a move back up to about 175. However, I do think that this is likely to be resistance. Looking at the weekly here, this is where I get a little bit more on edge. If the weekly closes anywhere below 162, this is not going to look good. We're going to very likely come back down to the prior lows at 150 on this dildo at 150 and then lower over time. So understand what's at stake. If we do end above 162, you're going to have an argument for it. But looking at the weekly Stokes, getting pretty damn weak. Getting way up there. Going over here to Mrs. Litecoin, who did lead the markets on the way up. Well, her weekly Stokes are crossing down right now, this beautiful bitch. Tested all the way down into my area finally. About 60. Did we get it on the other charts? Yeah, about $68. Fucking beautiful. US dollar charts looks like they want to go a little bit lower though, 65.50. Finex charts look like they want to bounce here actually. Yeah, I'm a little bit split on this one. Let's go to the daily. Daily looks to me like a rejection. We just actually had a bearish cross of these two moving averages. So yeah, Stokes are way down here and they just cross the upside. I don't like being short in this area, and I wouldn't want to be short Mrs. Litecoin. She's been the strongest one. It's not the right one to be short. The one to be short is the weakest ones, like a Cardano. But if she does take another leg down, $66.50 where I'd be looking towards. Okay, all right. And if she takes a leg up, then if she does take out this area at 76, and if she even ticks above $76, likely gonna go for a ride all the way to $82. Okay, let's go check out the other shitcoins really quick. Cardano kind of grinding this area out, did pop up towards our 1350-ish area. But here's the thing, looking at the weekly, pretty bad. Here's the thing though, the weekly is going to really trump everything right now. So if the weekly closes anywhere here or lower, over time, I'd be looking for a move back down to about, 1100, maybe lower. If the weekly ends above 1400, really bullish actually. That or not super bullish, but it would decide to move back over to 1600. BMB count, what's BMB doing? Weekly looks good to me, although weekly Stokes will be crossing the downside. This is very strong. Okay, daily did lose the 10 simple yesterday, so maybe it is getting wrangled down. Coming under a little pressure here. Daily Stokes down, daily RSI not telling us too much. I would be split on this one. Daily Jewel is coming into support, but I don't trust it. What I feel more comfortable saying is, hey, if you see BNB break 21 and what is this, 21 and a half, 21 and 40 cents, I'd be looking for a move down in this region somewhere. Do I have it charted? I don't. It should be right here. Should be right here. Right around 17 and a half bucks. If that would happen. By the same token, resist if we do want to take a leg up anywhere above 23.78 is where this be confirmed. I'd be looking for a move back over to prior highs at $25. Zcash. In a decision time, I don't like being short in these areas. I do think that it probably tries to bounce here a little bit more. We do see weekly Stokes getting way up there. Do see daily Stokes getting way down there though. You know, it's a difficult one right here. What would I say? Do I think that we bounce? I mean, we already got a bounce. Do I think that we bounce more towards 66 and a quarter? I think it's actually kind of likely. I think it is kind of likely that we do bounce up here. Bcash probably bounces back up to 273. Tron Cash, this one looks weaker. If it does bounce, I'd be looking for it to come into 2.46 cent. But I think this one's a little bit more likely to come back down and grind the lows at 2.27. Weekly, yeah, still coming down. Weekly RSI, losing the exponential. Yeah, I think that this one comes further down actually. If it does break 2.2 cent, then very likely coming down to about 1.9 cent. Neocash, nasty. If Neocash closes the weekly below $10, this thing's gonna come back down to about $8.50. If it does close above there, then probably does give another retest towards $11. EOS Cash, good reaction off this area. Do see weekly Stokes wanted to cross to the downside. What about daily? Yeah, daily wants to pop back up and test 506. Yeah, it looks like most of these things want to pop back up. So do I think that Bitcoin bounces here? Maybe. Yeah, I guess. They've kind of been good insight. Ripple, probably back towards 31 cent, 31 and a half cent, we'll call it. Monero Cash. Ooh, man, lots of wicks here. This one's already kind of like bouncing though. What about the weekly? I mean, this is just going to follow the rest of the market. They're all going to follow the rest of the markets. That's the problem with them. It's a problem with organized shitcoins. Stellar Cash, if we end anywhere below 10.5 cent, coming back down, but I think that this one probably tries to bounce. Yeah, this one wants to bounce back up to 10.7, maybe 10.8 cent, right in this region. Maybe higher. We'll figure it out if it gets there. So yeah, you know, do I think that Bitcoin bounces here then? Yeah, I think I'm going to be taking off these shorts. Does Bitcoin pop back up and test 53? After looking at the alts, I do think it does actually. I do think it does. Yeah, I'm going to be taking off these shorts. This is the position that I want right now. Alrighty. Okay. Let's see. With that said, get that on and out over there. There we go. And yeah, I'm going to briefly cover up the most important thing we have on Bitcoin, and then I'll leave you off till tomorrow. But okay. All right. So resistance right here, 52 on the lower time frame. So if we break above 52, don't think it's going to stop here. Don't think it's going to stop there. I think that we go all the way up to 54, maybe 55. And looking at the alts, it does look like Bitcoin does want to take a leg up here. By the same token, let me just make sure. Okay, good. Safe and Safu over there. If we do close a 3-hour dildo below 50.80, then I would be looking for a move down. But remember, here's the thing. It's really going to come down to the weekly. Where does the weekly close? Does the weekly on Bitcoin close above or below 52.80? If it closes above 52.80, continuation. If it closes below 52.80, looking for a move back down to about 47, then 45. And with that said, I think that covers up just about everything that I want to say. I'm gonna be going flat right after this video. Don't really want to be holding positions on a day like today's. why hold positions on a Sunday when you can not hold positions on a Sunday? So I'll leave it at that. Again, want to be wishing you all on this beautiful Sunday. I'll be back on tomorrow with some more live stream and video action. Looking forward to seeing you there. And if not, well, as always, want to be wishing the best of the best Sundays possible. Pray to your goat, Jesus, Lord and Savior, or your normal goat, or your normal Savior. Either which one, it's all good. And talk soon. Take care.